Mr. Henry Eisenstein, welcome to the REI Diamond Show. How you doing today?
Doing amazing, man. How you doing?
Nice. Also amazing. I am not in my normal Chicago studio, so I'm like in the corner of my a room here in Florida for the winter and just have yet to really design any kind of a good podcast studio. So apologies for those folks who are watching the video, and for those on the audio, you'll never know the difference. But this one might be interesting if we have the time. Henry and I are going to do some live underwriting on a deal or two later. So if you do circle back and watch the video, you may find that to be helpful later on. And will be posted on our YouTube channel and probably on Henry's too.
That's for sure.
Cool. Henry, for folks who do not already know your name, do you want to kind of give a brief intro of who you are, your history, and how you got to where you're at today?
Sure. So, quick 2 minute spiel. My name is Henry Eisenstein. I'm a broker based out of New Jersey. Now live in Florida. Been in the business about 10 years. Been a part of about $650 million worth of real estate deals from, as small as a residential single family rental all the way up to, $20 million industrial deals and everything in between. Specialize in investment sales. I'm also an investor, just like Dan. Own about just under $10 million worth of real estate now. Constantly looking to build a portfolio. And also, I coach individuals to learn how to find deals, coach brokers how to increase their business, help investors find great deals all over the country, and post a lot of fun content just like Dan.
Nice, nice. Yeah, I don't post much, but the podcast is where people can find me. It's like I'm kind of putting myself out there, but you got to find me in the cave if you're interested in hearing this.
I
So,
mean, hey, I read your newsletter every Sunday.
yeah, the newsletter is good. I like the newsletter. I like writing it, and people seem to also enjoy reading it. So I will continue that, and I appreciate your readership.
Yeah, we hope so.
So Henry and I are also partners with Aaron Lockhart in DEI Commercial, the Chicago division. We're doing commercial real estate brokerage, somewhat focused in the Midwest, but throughout the entire country. So that's part of how Henry and I are currently doing business, and we figured we'd come online here, talk a little bit about that, commercial real estate, brokerage, etc. Um, so where should we begin, Henry?
There's so much to talk about. So,
Let,
uh,
let's let's start. So you said you did the brokerage first, and I know a little bit about the detail, just recalling from memory, but a lot of people get in the business, become successful brokers, find themselves flush with some amount of cash and think to themselves, well, why shouldn't I invest? I don't know if that was some of your journey, but maybe like where was the moment where you shifted and started buying? And maybe that was different on the residential, and maybe there's like two shifts doing it on the residential, and then there was maybe another shift where things had to change in going after and owning commercial assets. So maybe we could start there.
yeah, definitely multiple shifts for sure. As I believe that it's a lot of little shifts, right? Like versus like a big epitome kind of thing, or epiphany, right? And for me, it was in the residential business because I ran a residential team, the typical residential broker type of aspect where, at one point we are doing over 100 transactions a year, but a lot of it was investment sales, finding people rentals, flips. We're doing some wholesale deals, and there was one deal that I watched one of my investors make like 100,000 bucks in a matter of 30 days, and then I think I made 4 grand or 5 grand in commission on the deal, and I was like, this guy didn't do anything. He used hard money. I don't even think he put the 10% down because he had told me that he had raised money from a group. So he put no money down and he made 100,000 bucks in a matter of 30 days from like close to close because the property didn't really need anything. And it was like he kind of wholetailed it, right? Like, the retail version of it. And I made like 5 grand on the listing commission. And I was just like, I clearly don't understand the full scope of what investing is, right? I was like, I feel like I did, but in that moment, I felt very uneducated because I was like, because if I knew, I would have been able to transact on that deal, and I couldn't. And then about a year and a half later, that deal came across my plate, and I made like 35K, but I did it. It was like for the first time ever, I finally did my own wholesale deal, which I had done other wholesale deals, but it was always with a partner. This was like the first time where I bought a deal and flipped it, and it was like a magical moment. I was like 24 years old. I was like, wow, like holy cow, I can do this, right? Like instead of making 5 grand or 4 grand or 7 grand in commission, I can make 35K. And I was like, this is pretty cool. I got to learn how to do it. And then obviously I knew enough to then take that money and move it into a 4 family, which I ended up flipping. I sold that property to like 35 grand, and that became my down payment on an FHA deal, right? So I lived in a 4 family, and I was like, okay, I'm starting to do the investing thing, right? And all of a sudden I built up, to like about 20 units, including a couple single family and a couple multifamilies, but all still under that residential umbrella, nothing ever bigger than 4 units. And then all of a sudden, one of my investors is like, "Hey, I'm looking for multifamilies in this area, really prominent area, a lot of great deals to be had." But he's like, "I want something bigger." I kept selling him 2 families, 4 families, 2 families, 4 families, 3 units, whatever. He's like, "I want something bigger." I was like, "If you can bring me anything up to like 50 units," I was like, "I'll be interested." I'm like, 50 units? I'm like, it just blew my mind. I was like, I'd never experienced doing a deal like that. And my family owns a lot of retail, so I always was kind of in the leasing side of that and understand retail. But I was like, I never really even never sold anything. I only did leasing, and only for a little bit. And then all of a sudden, I found him a deal, and it was really beat up, like 16 family, okay? Like probably the most beat up property I've ever seen in my life, okay? Every unit was disgusting. People lived there, and I was just, I couldn't believe it. And I was like, I can't believe this guy's about to buy it. But then what happened was I negotiated this deal, and I made 4% on a deal, and it was closed for about 2.5 million. So I made about $100,000. And I really didn't do a lot of work. I maybe toured it once, went back a second time during an inspection, but overall the deal didn't really need me, and it closed in less than 90 days. I was like, holy cow, like this commercial thing's pretty cool, right? So I finally got a taste for the commercial side, and on the brokerage side, now we've been a part of several hundred million on the brokerage side. But then what really hit me was about 6 months after that transaction, because I got hooked, and I was like, I got to find more deals. And I found this 110 family, which we can go into as much depth as you like on this one, but this was super interesting. I call up a guy, and I'm like, go through my spiel. Okay, I work with a client who's looking to buy a couple of properties in the area, and I was just curious if you'd be totally against selling it, right? Along that lines. He goes, yeah, I'm open to selling it. When are you going to be in the area? I'm like, funny enough, I'm actually going to be in the area later today. I wasn't, but I lied, and it was only 20 minutes away. But I was like, let's go. I got in the car and I headed down there. I go meet the guy. We toured the building, got in a few units. Another kind of beat up property, but wonderful location, not to maintain whatsoever. And I knew that there was some interesting value, and I knew kind of how to underwrite a property, not to the extent I do now, but kind of. And at we're sitting on like the porch. It's a 10 family. I'm sitting out front with the guy, and he's like, "So what do you think it's worth?" That's what he said to me. And he goes, "I don't know. You make me an offer." And in that moment, I didn't know exactly what to say or what to do. I just kind of went with my gut, and I said, probably make an offer around 1.35 million. And he goes, "I'd agree to that." And I'm like, what just happened? Like all of a sudden, like I couldn't believe what had corresponded. And I said, okay, let me talk. My response was, okay, great. Let me talk to my partner. I'll get you an offer by later today. This is like 4:00. I call up a guy who I just helped him sell another property for a 1031. I'm like, hey, I think we're buying a property together. Okay. I had no idea what the game plan was, but we ended up negotiating a deal where we bought this deal together 50-50. So I didn't make any commission, and I just rolled, all my commission, which I would have made about 100 on this. I rolled 100% of my equity. So instead of upselling the cost of the property and having the seller pay commission, whatever, we just rolled all that equity into the deal, and we got it. We bought it 50-50 essentially. Okay. And I was going to manage it. And we bought it for 1.35. Not even 12 months later, we got an offer for 2 million cash, right?
Nice.
And so we bought it. It was a wonderful deal. And that deal, even like about 30 days after buying it, I realized in that moment that there is nothing better than what I just experienced. I need to figure out how to do this 100 times a year, right? And it blew my mind. I mean, that was several years ago, but it was just, it was absolutely mind-blowing to experience that. And it completely shifted how I look at every deal. Instead of from the realtor mindset, I'm like, hey, like, why would I? Because I could have just told the guy, hey, I think as a broker, I could have just as easily said to him, hey, I think you could list this for 1.8 million. And he probably could have sold it, right? But instead I said, hey, I told him what I would pay for it, which was a fair assessment. And I thought back to my old guy with the investor where I could raise the money, I could do the deal, right? Like it doesn't have to be my own money. And we ended up buying the deal, and we have over $1.25 million worth of equity in the deal now today.
Nice.
And it's like that $80,000 to $100,000 commission check would have been cool, right? But at the same time, it's like it's not worth anywhere near a $500,000 worth of equity that cash flows almost $10,000 a month. You know,
Yeah, we have something like 22 people who are like deal makers on our team. And I'm big on the principal, acting as the principal. So my first deal, Henry, I acted as the principal, but I was kind of like dirt broke. I was 26 years old, and I made a $6,000 assignment fee, and that was like might as well have been $20 million, right? It was on a $5,500 house, so we're talking about more than 100% increase in the price.
I've never heard of that before. That's actually pretty impressive.
Yeah, thank you. But I was acting as the principal. It's like, what would an agent? First of all, an agent wouldn't even take this person's call because it was in such a rough section of town. But 6%, 10%, a $1,500 minimum commission, 3 grand commission. So I came in as a principal only to be, the investor mindset, always the buyer. I never really ventured onto the broker side of the field to like go out and broker deals. Um, but in our business at Diamond Equity, a lot of times we'll have brokers try to do what we're doing. They try to make the leap by joining the team. And that can be a challenge because they're so stuck in that habit of, oh, you can list it for this and then sell it for this, list it for this and then sell it for this. Where when it comes time to say those words, I'll give you what was a 1.35.
Mhm.
I mean, trying to like have that come out of the broker's mouth the first time is like this real odd, like Herculean effort. In fact, sometimes they accidentally say 1.6 million and they totally had written down 1.35 million, supposed to say 1.35 million, and they slipped and sneezed out 1.6 million as the offer and turned it into like maybe it's still a deal, but a lot of times you put yourself over your skis and you're out there too high on the price.
Has happened to me many times.
Yeah, me too. And probably amongst every single person on my entire team, we've accidentally said the too high offer, even though we had something different written down. So it probably happens to the best of us. Um, the broker has almost no risk in the deal,
Mm.
and the principal has a risk. So
All the
you're
risk.
dancing a jig, you got 1 million in equity that's positive. You stepped in and took a calculated risk at 1.35 million. Anything could have really happened. The city could have came and condemned half the building. The city could have said, "Oh, there wasn't permits for this and such and such." All the sewage lines could have been bad. There could have been a fire in there, and you're fighting the insurance company for 2 or 3 years, and they don't pay out. So there's very real risk in every transaction for a principal because you marry the property.
For
The
sure.
moment you take the deed in any transaction, you're now responsible and liable if any kind of environmental issue were to pop up. Most people are like, we're buying houses. This is great. There's like, totally clueless. Well, in the state of New Jersey, especially, they thought it was a good idea to bury oil tanks
Yep.
for years and years and years and years and years. So there's very real environmental risk when someone takes the deed in New Jersey. If someone didn't know any better, they came in from California. Oh man, I'm getting a smoking deal. Look at this, 250 grand. Buried oil tank might be 50, 70, $80,000 if it had leaked to dig out all of that dirt and then get rid of it, right? So a lot of times
That's the
there's
exact story has happened to me too on a flip.
the tank.
Yep.
Yeah. And what was your exit cost?
We lost almost 100 grand.
Like meaning you lost it. It was not a profit of 100 grand.
Yeah, I'm saying we were negative on a flip by almost $100,000.
Did you know the tank was there on day one?
No.
Case in
Yeah,
point.
exactly. And
Case
by,
in
I mean,
point.
like this is something that again I stress to everybody when you do inspections. We just didn't end up doing it. We ended up closing in 3 weeks and just didn't come across the didn't we didn't think about it and until it was too late.
Yeah. Yeah. I'm in a deal now. I hope we just lose 150. I hope 150 is we'll be pretty happy to lose 150 on that deal. The architect's plans took forever. The city hates us because we didn't pull the permits right. We went through 3 different contractors. Like the list goes on and on. And it's like, we're not even done the rehab yet. We're
Yeah,
still working through. We have to now finish this whole rehab so that we can go lose money. But like, if we try to sell it now without the rehab, we're probably going to lose double the number that we're going to lose in the end, assuming the market holds up and we get out of that deal.
100%.
six figure loss. So the risk is real on the principal side, and the broker side does not come with anywhere near that level of risk.
But
Am
I
I am
also
I
believe there's,
accurate there?
yeah, well, I look at it like this. I agree that most brokers have zero risk. I think that is 100% that is a very true statement, and I have felt that way in a lot of different deals. But I also do believe that there's this happy medium of wholesaling, which no one talks about in this brokerage world. No one. It's a very, like, mum's the word. Don't think about it that way. You're a fiduciary to a client. And I'm like, you're become a fiduciary when documents are signed. I'm not your fiduciary just because I called you on over the phone, right? Like, that's not how this works, right? If we sign a document saying I'm going to list your property, I then become your fiduciary, right? But I am like, it's not like your financial advisor is your fiduciary because you're talking to them over the phone. That doesn't make any sense. They could say anything that they want over the phone. It does not matter, right? There's nothing signed. It's like a stock, same thing with stock. Like, people take it a little bit too literally. Where, like, for me, I'm like, hey, what makes the most sense? Well, I want a win-win-win solution. Seller wins, I win, buyer wins. How do I do that? Where we all make the most money possible. Everybody's happy. And it's not just about making the most money, but we do it the cleanest fashion with the least amount of risk to me. There's instances where I'll look at a deal where I'm like, hey, I just want to be the broker and I'm totally cool with it. Right? Then there's other deals where I'm like, hey, there's like 200 grand on the bone here where, and I don't want to own this property, but the spread between what the seller's willing to accept and a buyer's willing to take, and I don't want to buy this for whatever reason, but I can make a quick 200 on this, which I'm literally dealing with on a situation right now. I'm just going to take a wholesale deal, right? I'll lock it up for, this deal for 700 and we're going to flip it for 9, right? I like that deal all day long. No problem. It's in an area I probably wouldn't buy anyways, but the spread's good. And then you have the situations like this, this multifamily where I'm like, hey, I 135, I don't even care if I'm going to flip it and make 500 grand. I'd rather just take down the deal, right? And take the cash flow and hold it for equity purposes, write it all off, do a cost seg, call it a day, right? So, and it's like every single lens works, but it's not like, I feel like too many people are just pigeonholed to one vertical, one way of doing business. And for me, I'm like, hey, there's a lot of ways to look at every deal. First is a principal, right? And say, what would a principal do? What would a principal offer on this deal? Where would they need to be to make some money? Then, okay, well, we can't get it for that price. What's next? Wholesaling. Okay, well, what's the spread? Where's the seller at? What can we get a buyer at? Is there enough of a spread here where it makes sense for us to get busy? Next, it's like for a broker, for a broker, it's like, okay, well, if there's not enough spread for us to wholesale this between, A and B here, let's go into a broker fee and maybe we make 3, 4, 5, or 6%. Oh, well, that doesn't actually make any sense because, the seller wants way too much money. Cool, no problem. Hands off. And hey, Mr. Seller, would you be totally against if we marketed the property for sale for you? We'll see if we can try to get you some offers. We'll put it on the market and call it a day. Right? And every single property fits one of those different sectors. And like, I'm not judgmental. There's no energy or emotion towards it. It just fits one of these boxes. We move on that. And that's it.
I uh I recently read What It Takes. Have you read What It Takes by Steve Schwartzman?
Yeah, fantastic book. His
Oh yeah.
autobiography.
Yep, yep. How about How to Make $1 Billion by Brad Jacobs?
I literally have that book on my night table in my bedroom.
So both of those guys had one of the same takeaways. For those that don't know, Steve Schwartzman is the founder of Blackstone. He put that together. Sam Zell was one of his first earliest clients, and they did a ton of business together.
Then
Steve
he bought his
Schwartzman,
portfolio.
what's that?
Then he bought his portfolio.
He actually wholesaled like 50% of that portfolio on day
Yep.
one, like
Amazing.
$19 billion double closing. I don't think he actually took the deed. I think they just got assignment fees at the
Incredible.
table to make it work. I don't have inside knowledge on that, but the way he talks about it makes it sound like they did not double close, which would have been smart because $19 billion of transfer taxes would be like an extra billion and a half dollars or something throughout
Oh,
the
for sure.
country. So,
It'd be insanity.
but one of the biggest mindset set shifts that occurred in there was both of them nonchalantly said, look, you just got to work on big deals. There was no explanation. There was no doubt. There was no do all this other stuff. There was no fill in all the blanks with doing everything that comes down the pike. It was like, we're only going to work on big deals. That's it. Why are you going to do anything else but do a big deal? The way that Brad Jacobs says it on in his book, which I listened to on Audible, And the way Steve Schwartzman talks about it, like the billionaires are saying, just work on big deals.
100%.
And so for the shift to commercial and my own personal portfolio, to me a big deal is some like $2 million takedown or like a fucking $13 million self-storage development. And then I listen to those guys and I'm like, okay, it puts it into perspective here a little bit. These are still, I guess, big deal to me though.
I mean, hey, I'm sure there was a point where that was a big deal to them too, you know?
Yeah, yeah, 100%.
It,
And it's
it,
funny. So I was on the phone with a broker today, shortly before we recorded this podcast. Um, and he's describing an illustrious career with national tenants opening, and he had an illustrious career, did, exited a business and did a bunch of things. But one of them was 30, 40 acre town center development,
hmm,
anchored by a Target. And I was like, oh, the way he's talking about it, he's giving me the credibility, but he wasn't the principal there. It was like some other guy was the builder principal, and he kind of helped, put the tenants together, key component there, but he didn't take the risk, in the 30 acre freaking development. Like it's probably, if I had to guess, a
100
$40
million.
million property in today's dollars to maybe $70 million property. But like I caught that the risk level wasn't quite there.
For sure. For sure.
Yeah. Um,
By the way, those are two great books. I'd recommend anybody take a look at, read them front to back. I've reread How to Make $1 Billion so many times over, and I couldn't agree with you more. That I feel like people like I literally just had a training where I talked about increasing your sales price. Where it's like people go, oh yeah, I mean like sure, yeah, like it's kind of a simplistic concept, increasing your average sales price every year, whether you're wholesaling your average fee or your average average deal size, right, or whether you're brokering or even purchasing, right? Like just the simplicity of it makes sense, but how many people actually strategically go, this is the plan to get us from where we are average sale price to here, right? Because if like I was, I've done the math 1,000 times. Where like I was selling $300,000 houses about 10 years ago. My average fee was like 5 or 6 thousand bucks, 2%, right? And it's like I did the math then 10 years ago, and I remember going to a seminar where we talked about making $1 million, and it's like when you're making, call it 5 grand a deal, to make $1 million, talk about 17 transactions a month. It's a ton of people, different types of clientele, transactions, attorneys, title companies, emotions. I mean, it is incredibly frustrating. Where now we do that, which would be 85 grand a month. I'm like, we do that basically every week right now, and it's like, and it's sometimes it's one deal. Sometimes we do that from one. We do one deal that covers that for an entire month, right? Like, so it's like I would rather, and I was joking around with even some of my coaching students. I'm like, if I could do 10 million bucks in one deal every single year, I'd be thrilled, right? It doesn't, it's that level of think where I'm like, hey, like I actually don't care about doing hundreds of transactions. I mean, I'm probably gonna end up doing them anyways, but until I find the way to do $10 million in one transaction one time a year and call it a day and spend the rest of my time investing and spending time with my family, right? But it's like that level of think of saying, hey, like if I was going to do $10 million in one deal, what strategic path do I have to get there? What would be my path to do that? Well, I'd probably have to find a deal for about 100, 150, maybe $200 million that I could sell for 5% more than I have it locked up for. You could make $10 million in one deal. It's not overly complex. One of my coaching students on a live call was on the phone with a guy with a $145 million deal, 700 plus units. It's like if we locked that up and somehow got him to agree to, let's just say 120 million, and we found a buyer for 130 million, you make 10 million bucks. It's like it's just moving to zero. It's the same thing of a $120,000 single family house in the middle of XYZ area and selling it for 130. You know, you find a couple good buyers, I mean, like it's just so fascinating where it's like all of a sudden now the conversation shifts so much, and where the impact ends up being a thousandfold of like the deals we used to do.
Yeah, I guess the good question, or the question I asked myself maybe a year or two ago, what am I going to say no to in order to make space for the bigger deals?
100%.
Yeah. And so we're not going to do a flip that we can make 35,000 on. 35,000 was a flip I had been happy to do 10 years ago. Um, going to have to be a little more selective. And if I were starting in the business today, there's something to be said for doing those kind of things and earning your stripes. You got to go and, buy because your bankroll is what it is. You're buying something for 150 grand, putting 50 grand in it, sell it for, 250, and you walk away with like 38,000 after all the interest is paid and the closing costs and all that. That's great, right? It kind of gets you started. And we see this trend too with like new flippers, new investors. They first get in the business and they're going to buy those deals, and they're kind of easier. Maybe the construction's not as much, hair on the deal in terms of the level of construction or the oil tank in the ground or whatever the case may be. Maybe it's raising $350,000 in cash.
Mm.
It's kind of hard. There's more people that who could write $150 or $200,000 check to cover that rehab and be your private lender than 350 or 400. And same if you went to 7, 800, 900, a million, 2 million and on up, right? There's less people available to do those kind of loans. So there is a place for working your way up in the numbers, but I think being intentional for me about getting uncomfortable about participating in very large deals over the last, it's been 3 years since I've started to collect much larger assets myself. Um, and I think maybe I'll focus in on the uncomfortable moment. When I bought a house, a rental property about 8, 9, 10 years ago, it was 55,000 bucks, I think. One of my partners, wholesaled to me, made 5,000. I was like so bent out of shape about whether or not the tenant was actually paying. And finally came a moment, the guy's like, well, then don't buy it then. Either you wire the money or you don't. Like, okay, I guess I'm wiring the money. It felt like, maybe that money's going to be gone forever and this is going to be like a major problem and headache for me. The money came back. I sold it for 110 grand, 4 or 5 years later. I had to evict the tenant. It was a big hassle. All the headaches I feared actually came true, but luckily the market moved and I made money. Those same the same fear of sending the wire. So for me, if I'm like, Henry, you call me, you're like, hey, I need $250,000. We're going to do this part of the deal, and this is how it's going to work out, and da 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 da. If I'm like, Henry, I'm going to do it. I'm not backing out. Like under, I never have. If I say I'm sending the 250, the 250's coming. But even still, even though I know I'm going to do that, I have the verbal commitment to the bigger dollar amount and the bigger deal. I say I'm going to do it. And then there's still a little internal struggle
Of course.
until the wire is sent off. Now the wire is sent, and it's like there's a sense of relief, even though the deal still has to get to the profit zone and has to put distributes. Tons of shit has to happen after I sent the money. But there's those two moments there. So number one, I'm mentally and verbally committing to the deal, saying it out loud to the person whose deal I'm going in on, and then or even the deal I'm going to buy if it's a deal I'm buying. And then when the wire is getting sent, that's the two moments of commitment I notice where I bet a lot of people would stop short of verbally committing. And I know for a fact there's a lot of people who verbally commit and then don't send the wire,
100%.
which is worse.
It's the worst feeling in the world. It's funny. I have this guy, unbelievably kind gentleman, worth upwards of $500 million. Very, very, a very savvy investor. Has been in the business for 50 plus years. And we've become very close friends. And we talk and we talk and we talk. And he's like a father to me, right? Father figure, kind of guiding me through a bunch of things, showing me all the different things. I literally have spreadsheets upon spreadsheets that he's printed out and given me, and like, you could do this, this, and this. And I never pitched him a deal, but he's always like, listen, if you ever find something interesting, let me know. I'm interested, because this guy just, basically all he does is write checks all day long. So anyways, I finally have a deal that I think is interesting. And I'm like scared to death to ask this guy for money because I'm like trying to keep a good relationship because I know this, like I want to make sure that I crush it, knock it out of the park so well. This guy makes such a great return that hopefully we'll do business forever, right? And I have this deal. Like for me, again, it was about a $2 million deal. Okay. I needed about $500,000 for him, maybe six. I call him up. I'm like, yeah, so listen, I have a deal, probably a 30 IRR in 18 months, right? Or less. And he's like, how much do you need? I said, 500 grand, like begrudging, like terrified to say it. And he goes, honestly, Henry, if it's not, like, it was a long pause, by the way, because it felt like 3 minutes of just dead silence, even though it was probably maybe a half a second. He goes, honestly, Henry, if I'm not writing a check for 10 million, it doesn't make sense for me to do it. And I'm like, what just happened? Right? Like I had such like weird nerves about it. Like this guy's not even like this guy could care so little about a $500,000 check that it doesn't even make him enough money to consider even writing the check. So I'm like, it's just these types of opportunities, these moments, for me, it's like when I'm speaking to these types of investors and what people are looking for, the size of the deals, it's like take a step back and realize like, hey, like some people, especially like when you're talking larger numbers, like you're saying, even like a $50,000 wire or the $250,000 wire, it's like every single person has their threshold. Where like if you're looking for a raise or something like that, like whether it's that hesitancy or them wanting to do the deal or their desire to do the deal. Like again, I had the same exact feeling with the $250,000 check I invested in a deal. I was freaking terrified to send a 250K check about 2 years ago. And after I did it, I mean, we made, I don't know, I think we made like 25, 23%, something like that in like 6 months. It was actually great. It was a quick in and out kind of deal. But I've never been as terrified as sending a $250,000 check. And it's like when you talk about these massive deals, it's like there's such a parallel versus like what I actually have fears for, what you have fears for, in whether it's, same thing for realtors and investors doing their deals, right? The levels of risk and everything else. So it's a wild type of business.
Yeah, and I think back to our what it takes, like what it takes, we have to think bigger. And I was on stage at the Commercial Academy that you're going to be joining us at, and I'm talking about another book, which was Winning Through Intimidation.
Mm,
Fantastic book, written by Robert Ringer, required required reading for anyone in our company. Um,
mm,
so I give the presentation. I'm talking about image power. I'm talking about how we did 260 deals and 300 and something last year, and I shared some of the numbers and everything, um, and then I shared whatever the deals I had cooking, my 30,000 square foot vacant warehouse, and a couple other small warehouses, and Scott, who I consider a mentor and a friend, is like, I'm going to challenge you to step up your game and think bigger and go after higher quality assets. And we're putting a shovel in the ground to build our Class A storage facility. And that's the first baby step toward the higher quality asset.
mm,
And guys and gals, once you make it to another level, like another friend of mine from Fort Lauderdale, I won't mention his name. He's selling all his Class C stuff. He's got like 5,000 units, owns them all individually, and he's like only focused on Class A. And to me, it's like Class A. I'm like so used to being the junk dealer where I'm like finding the junker house and we're fixing it up, making it into something beautiful, and we're
mm.
repositioning it. I just haven't figured out how to underwrite at the top end. And so when you're like, hey, my buddy had 500 million, I thought that's what you were going to say was it was too small of a deal. And I'm thinking in my mind, another friend of mine bought a building for 30 million, owned it for like 18 months. I don't even think he raised the rents on the current tenants and he sold it for 60 million. And it's like that's the deal that like if we saw that, Henry, if we were trying to underwrite that deal, I don't even know at 30 million, we would probably just be like, oh, it's just the guy's piped, it's a 6.5 cap, it's way priced out. We're not even going to call around the brokers or anything to see if the rent's like that thing's just it's retail junk. We're not going to spend our time. And yet, after you give your buddy the 15 million that for him putting his money in, and you take your 15 million in profit, right? Like there's the $10 million in profit deal that we're like dreaming about. So it's like still off our radar, maybe somewhat at some level, because these assets are like maybe right in front of us, but one person has to see whatever everyone else doesn't see in order
Yeah.
to make it happen,
Yeah. And I feel like a lot of people also get caught up in a metric, right? Like they get caught up in an IRR, they get caught up in a price per foot. I know I have, right? Or a cap rate or whatever, right? And like for me, it's always like the mistake that I've made up until like I had a recent conversation about 90 days ago with this guy where like I was just looking for 25 IRRs. Like that was my bottom line metric. And with being very conservative on it. And the problem with that, it's like you're just not finding enough product out there ever to make any sort of like, look, I might buy a deal or two a year, right? And obviously, I'd invest with a few friends here and there, but like it was never enough to actually see some size. But now, like we're on contract on almost $15 million worth of real estate today because it's like I said, hey, like the way to scale is by drop like I don't have to only do 25 IRRs. Like, hey, like I also make plenty of money from my brokerage business where like I don't even need the money today. So like doing 18 to 22s or, in that range, high teens for good product, in a little bit of low 20s for a little bit lesser product or quality product, it's okay. And I'll just take pieces of equity just along the way and just like, hey, like as long as I can make my investors some good rates of return, they're thrilled. I don't need the money today, and I'll take it when we trade in 5 years. It just doesn't matter. And I'm building equity over time where like making like that huge shift for me is I feel like it's like something where like that's the difference of in 20 years from today, me being, a person being worth like myself being worth 50 million versus 500 million, right? Because I only did a deal a year versus three or four or five or eight deals a year, right? And it's like overcoming that, like I don't know whether it's fear or just like the hesitancy that kind of holds you back.
Yeah, and we're in a kind of market too where from 2019 to 2022, the kind of deals you would hear about and people would pitch were 2025 IRRs for like existing product, turnaround, multifamily kind of stuff.
Yep,
And a bunch of them actually sold and produced, 20s and 30% IRRs, but that was a market bubble. And
100%.
now we're in a contraction period for the last 2 years. This period is unlike 2008 through 2012, where there was like brand new multifamily complexes trading at 30 cents on the dollar. Banking regulations have changed and they're no longer forced to actually exit out of the assets the way that they were in the past crises. But the crises buyers who are going to look like geniuses right now are the ones who are buying the Class A office buildings in the core downtown environments. They're dropping 30 million here, 12 million there, 8 million here. And everyone will look back and say, wow, look at how smart they were. They bought and they were so contrarian against the grain. Most of us are like, we're not touching office with a 10-foot pole. You guys are nuts.
That's me. That's me. I feel that way.
Yeah. Um, but where else I'm going with this is I see some syndications out here where your projections are 12, 14% IRR. In fact, the guy who bought for 30 and sold for 60, he projected like 14, 16% on that one. That was his IRR projection on the rollout. And he blew that out of the water. It was probably like 80, 90, 100% return for his investors within like 18 months, right? So I think that the people who know what they're doing are not over promising. And so they're not putting something like 25 IRR out there unless it actually is a deal where that's the kind of risk you're taking, development deal, something like that. But I think that the deals people invest in now, when the market is in a slump, this is like buying at the bottom. If you can find a good syndicator, a good partner, a good operator who has experience and can run a deal from start to finish, we're doing them at the bottom right now. The interest rate environment is terrible. The tax code is terrible. Hopefully that's going to change here in the next 30 days. Would be like great delusional optimism on my part. But if some things go our way, you're looking up in 3, 4, 5 years and you have 25 IRRs that you invested in thinking they were 12s and 13s and 16s, right? So
100%.
this is the bottom of the market when it comes to like commercial real estate. We're in it. It may last another year, 2 years, 3 years. At some point the deals are going to turn around, but the deals that are going to turn around and pay and be the ones everyone's bragging about are the ones that people are investing in right now. And right now is a very tough time to raise money with the tax code going against us. And everyone is juiced looking for the 25 IRRs because that's what everyone experienced in 21 and 22 and
It's
maybe
interesting
a
how,
handful cashed out in 23. Not too many though.
yeah, but it's interesting how like just a short period of time completely shifts people's perspectives. Like that window gave everybody such a weird perspective of where things should be when that has not been ever a real ideology of what real estate investing has been forever. For like the longest time. I don't even know the last time other than during COVID where you saw those, 20 plus IRRs. Like most of the time they were in the high teens and people were fine with it, right? And like that was a good deal, right? That was a great deal. And now today, because of the environment of today and everything else, it's like I got really skewed into like this weird thinking of 25s is where it has to be. And it's like, to be honest, if you're making 25 before and I'm talking before tax, depreciation and appreciation of the asset, where I'm like, honest to God, it's like, like if that's where you're at, I'm like, it's honestly, it's so rare to find that I honestly think that, as time goes on for right now, I think that like you maybe if you're lucky, I don't think I've found a 25 IRR legitimately maybe more than one time in 2024. And if I find more than one in 2025, I think that like you're probably not buying enough stuff, right? Like it's so silly to me.
Yeah. Yeah, and like my guy, right? You have to do real estate investing has a lot to do with luck, right? You can't underwrite luck in on the front end of the deal. Don't invest your money because, oh, we're going to get lucky in order to make your return. So if someone's telling me, hey, it's 12% IRR, which I did a deal, 12% IRR on my money is what the projection is. But I'm looking at the market and the long term, and we're going to hold it for 10 years. It was kind of like a tax advantage type of deal, which is why I
Hmm.
did it. But like my delusional optimism or my like luck in the back pocket is, well, the rents are potentially going to increase more than the 2.5% that we have them at. We have a few more lots we're going to develop in the mobile home park. Some things could go our way, and we might get lucky and it turns into something better. Think about the $30 million deal that turned into 60. Completely lucky buyer. I think it was like corporate, some national wanted their headquarters here, bought the property. The lease was like expiring and everything else, if I'm not mistaken. I'm sure I have some of the details wrong.
Which, by the
But
way, would have
it,
made it worse for us to look at
he'd have been like $7 million.
it.
7 million, not a penny more. This guy's out of his mind.
And we want 90 days of due diligence, maybe more.
Yeah, and you got to carry paper, 90%.
We'll give you 10% down, 3% interest only for 6 years.
Oh man, that's great. So, that's the point, right? You got to be in the deal in order to get lucky. Corporate's never going to come by your site unless you own a site. They're never going to come by all your sites, so you can't underwrite on that. Amazon moving in or Tesla across the street from your industrial property that you buy at a 7 cap. It's not happening unless you bought it at the 7 cap, right? So you got to like place these pieces on the board, these bets. Probably like the roulette wheel, you're like putting down enough of them, and sometimes your number's going to hit and it's going to be like blow all expectations out of the water. And I think a lot of real estate deals that we see happened like one of two ways. The guy owned it forever and bought it for free down, before the neighborhood gentrified. Well, he owned it forever. He earned every freaking penny of his exit 30 years
And
later.
by the way, he probably felt the same way we did when he bought it.
100%. Like he was overpaying, right?
Exactly. He was just like, maybe I should, offer him 50 grand less, like.
Yeah, correct. Well, didn't want to own it for a long time. I mean, some people are stuck in deals for the last 10 years. You couldn't get out of deals. There's a lot of deals you could not get out of the deal. All of a sudden you're in the money when COVID hits, and COVID turned out with the low interest rates to be a very prominent source of luck in the market.
Yeah, I mean, the interesting thing about these types of times is like, if you can weather storms like this while competition is falling out of, like, going out of business, going bankrupt, losing money, hand over fist sometimes, and losing relationships because of the decisions that they made in the past. When you can not only survive but thrive during these types of times, which I'm not even saying you need to do 5x than the year before or anything like that, but I'm just saying small minute increases per year in these types of economic circumstances. When we have another shift, which will always come because cycles are cycles, you're gonna freaking all of a sudden have a 10x return in your business, and you're like, oh, I'm a genius. Like, you're gonna think that you like, but no, it's because you took calculated risk during a time where most people weren't willing to do that, right? It's like, I my mentor that I was talking about, he said something very interesting to me, which was, these are the types of times where you just make enough money to get by. And he's like, he made all of his money in like a handful of the timing in the markets where the cycle exploded. He's like, he kept doing deals, but like they weren't unbelievable. He just kept doing enough deals where like they kind of made sense. He's like, he never made a killing during, for a long period of time during the low parts of the cycle. He's like, you just make enough money to kind of get by. And then all of a sudden when the cycle shifts, he's like, I made $100 million in a 24-month period of time, and he's like, everyone thinks I'm a genius, but I just bought a lot of decent deals and the economy came finally coming the other direction, right? So it's like, like you said, it's kind of like you have to be in the business to get lucky, you know?
Yeah, 100%. That's one of the big one of my own like operating principles or things I say a lot is like do many deals. Right? What if that deal I talk about where I'm losing that 150 grand? What if that's somebody's first deal, Henry? They're done. They're out of the game. They're out of the business. I mean, if it's a $12,000 loss on their first deal, a lot of people are going to be done. They're out of the business. Um, if you're doing many deals, you set out to do like 5, 10, you just know you're going to do many deals. Now you have enough deals to cover that loss. Hopefully one of the other 4 or 5 you get lucky on, the market moves, you get your bidding war, and you more than cover for that loss that you have on that first deal. Do many deals.
We'll do one small one, and there's, by the way, absolutely no. This is completely random. I just picked this one at random. There was no prior seeing this property or anything like that. Um, this is a six-family property. I just liked it because it at least had some information online that we can kind of mess around with.
I don't see it on my end yet here, Henry. All right, here we go. So here we are underwriting. This is the new product that came on the market. And I think you
Yep.
said before the audio and video cut out that you have a habit of doing this on a daily basis.
Yeah.
Before we get into the underwriting, is that so you can keep an eye on the market? Have you ever found deals here that were listed that you ended up acting on? Or like, what do you think is the sort of takeaway if someone listening built that habit, what would they be expecting from a skill to sort of develop with that?
Yeah, so what I was saying was that I do this every single night before I go to bed. I'll just take a quick look at all the newest stuff that got listed. And the reason why I do it is not only for myself to kind of keep up the skill set of practicing underwriting and just always being attention to the market. Like you said, like really understanding, like, hey, like I want to know everything that hits the market and I don't want to ever have a moment. There was one time that pissed me off so much was that there was a deal that closed. It was an industrial building. It wasn't a big deal, but it was like a 25,000 square foot industrial building that was listed for like an unbelievably like a steal of a price, and because it was listed with an agent who primarily was residential. I would have, I mean, we probably could have sold it for twice what it was listed for. Let's just say it like that, right? And it was like ever since I saw that one deal, I'm like, this will never happen again. Where I'm like, I need to be the one to always be paying attention to these types of stuff. I'm like, think about it, guys. Like, just like we talked about a $10 million deal, you can make $1 million. I mean, like, or 100 grand. I mean, look, if you were only going to make 100,000 bucks on somebody else's mistake, which happens frequently, then you're like, you think it's worth 15 minutes a day, right? I think so. So, anyways, I'll look these up every night. I'll take a few of them that I like the most. I'll send it to a few different guys that have, and I'll be like, hey, make an offer on this at this price. You know, these are my terms, and I'll just, and we'll try to see. I'm actually working on like 2 right now. We're not under contract, but we're negotiating. But I think there's a lot of opportunity here. But anyways, this one again, completely random, a newer listing property. It's only a 6 family, but again, we'll run some numbers. So this is nothing against the broker, but so this is a 6 family in a decent location. I like Bayonne. I clicked on it only because I thought the price was a little high and the cap rate was a little high. So I think you and I would come up with a pretty seriously different number than what they have listed. So. We can at least look at it from here. So 6 family, gross annual current income right now is 116. Net operating income says 74. I also like that they don't have any vacancy rate. Obviously, I can't really tell what they're including in the 20,000 or the 22,000 in the operating expenses, but my typical, why don't we do this? How about we do this, Dan, for everyone here who's listening? Obviously, you and I make offers probably more often than most people probably will do it, on a week. Like we may probably make more offers in a week than most people make in a year. So why don't we do this? I'm going to quickly run my numbers. You quickly run yours, and let's see who comes up with what.
All right.
So we got 116 gross. Let's see what you got. Let's see what you come up with. Remember, it's only 6 units, and this is a decent
Can you do
location.
me a
This is like a
favor?
B location.
Can you do me a favor? Scroll up for me
Sure. Yep. I'll go
and then
through some
go through
images.
some of the photos slowly here.
Decent condition. It says 5 2 bedroom, 1 baths.
And one bed.
One. This market, by the way, would trade probably around a 7.5 cap all day. Maybe an 8 all day. Good location. Not an A by any means, but probably a B market for sure. Do you have an idea of where you're going to come in at?
Yeah, I backtracked the rent to see if there were any room in the rents. And with those dated units and a quick glance at Zillow, I mean, you're talking 1,600 a month for something nicer, 1,500 a month for something like in our condition that's a two-bed, one bath,
Okay.
17 for something nicer. And I backed in 16, it was like $1,600 a month roughly is what they're saying is the gross. So I don't feel like there's a ton of room to push the rents much higher from what we're looking at here. I would
I
probably
agree.
offer eight
I
and a half
wouldn't say
cap here.
substantially.
Yeah,
And
I'd
what's your
probably start
NOI
with
that
eight.
you're going off of?
I don't have that on the screen right now, but 74,000 divided by 0.085. It's like 870
Oh, that's right.
grand.
Here, I'll share the
And
screen
then,
with you real fast.
six divided by six, 145,000 a unit. My quick napkin math before I did that would have been like 1,600. And then I would have just said that was, 1% rule. Maybe the top end of that range is like 160,000 a unit. Low end 145,
Yep.
maybe come in and start them at like 135, 138 to land at 150-ish or so. That
Yeah.
assumes I
So I
want to
was.
own the property.
Yeah, yeah, for sure. I mean, I was going to be around like the 750 mark to start. To make that would be my initial offer. But I know that I could probably sell this all day long for probably 900, 950, right? A $70,000 net divided into an eight cap, 875. I mean, you could probably even sell it for a seven and a half today. So that would be divided by 7.5%. Probably could sell it for 933 all day long. This five and a half cap deal, this is exactly what I was talking about at the very beginning. This is like if the seller's stuck, which by the way I always find interesting, right? So you can kind of sometimes look at numbers and you're like, okay, 1.3 million times 6% is 80 grand. So the seller wants to net 1.3 million and the broker wants to make 80 grand, right? It's like, oh, how did you come up with 138? Oh, well, I just tacked on my 6% commission to what the seller said they wanted to net, and that's how we came up with it, right? So I just find hilarious because that happens way more often than people realize. So, anyways, you and I, okay, fine. We could be offering this person. I'll actually make a note. I'll offer this person. You said 850 is your number.
Yeah, you need to offer them 750 though. So like the other takeaway is if you're going to underwrite deals, it's best to do that with two people who are going to put their cash in together, having the conversation. So like you and I are buying this together. We would have this conversation. You know the market better than me. So your number at 750, I'm always going to choose the lower number. It's going to be pretty freaking rare that I'm like, no, no, let's go in at the 840 that I penciled out. So I think that the magic in underwriting with multiple people involved on the deal is critical. I think
Oh,
that's one of the
100%.
reasons our company at Diamond Equity has managed to make a profit on more than we've lost money on is because more than one of us are weighing in on every single green light on a deal that we ever have. And I think that investors who are working on their own to buy for their own portfolio are at a bit of a disadvantage. Hopefully, they have a husband or a wife or somebody that they can bounce the deal off of a little bit to get to the right number that works.
100%. And I would even say I actually love the idea of having multiple people underwrite it. I always try to ask my agents like, where do you think it's actually like, where would you make an offer at if you were, if you were to make an offer? Because I always like to get a gauge from them. But I agree with you 100%. I always like to say like, okay, we'll both come up with a number. Let's go with the lowest one to start. I think that always makes the most sense for sure. Like you can't go, you can always go up, right? You don't want to offer too much. Um, let's see
And
if we
I
can
would
throw another one.
caution, yeah, I would caution against the other person underwriting with you being the broker, even if they're representing your side.
Hmm.
I would still want to have I can't tell you how many brokers are trying to buy or rep me and they're just like their vested interest is in earning the commission and getting the deal to settlement. So they're working against your interest, even though they're supposed to have a fiduciary. They're not the ones who are going to put the commitment on the line. And if the building court comes in and they have to tear down half your building or there's an oil tank in the ground, brokers out of the deal, they made their money. So it's way more helpful if it's somebody who's got actual cash going into the deal to take or put more weight on their opinion in the deal. I remember in the early days, Sometimes
100%.
people with lower experience will advocate for, oh, we should, pay higher, we should do this, we should do that. They're unaware of the risk that they're taking on. So I'd be very cautious. You sometimes have to back down the junior partner and the experience level a little bit and help them to understand all the real risks in a deal. It's not that Henry and I are being cheap here at 750. It's not that we're being greedy and we want to hit some colossal home run. It's that we understand the risk that's involved in taking the deal on. Now, we may talk ourselves into buying this at a higher price after the negotiations going on, and we took a much deeper dive in. We discover it's a better street, the rents can be pushed higher. There may be reasons why it works at the higher number. But yeah, being cautious with someone else putting the money in the deal is a critical piece here.
For sure. And like, I mean, as a broker, I've also been the kind of person where especially because I've been on every side of this coin where I'm like, I don't feel comfortable having you pay anything over X. And if you want to buy this deal because the seller is only willing to sell it at X price, which I don't might not believe is a great deal, I want to let you know, like, I'm not going to tell you to overpay. If you don't like, if maybe this isn't the right deal for you, and I'll talk myself out of a deal because it's not about that for me. I want to make sure I work with the rest of my, right? And I'll be like, hey, and then I want to make sure you don't lose money, right? And you will lose money if you buy your deal at X price. But if you're okay with maybe putting down more money and having a lower rate of return on investment, then okay, I can respect it. But I want to be very clear. So, anyways, this is the next one here, 25 unit deal, a little bit larger than the 6 unit we were just dealing with. We're dealing with two multifamilies. Maybe we can try something else afterwards, maybe. But anyways, this is a 25 unit. Let's see if there's any income. Can I click here to access? Are they gonna make me download something? Let's see if I can quickly get a doc. All right, there you go. So 25 units, each apartment, no estimated income after rental increases. Okay. Total expenses here down below. Total income 513 grand a year. I like that they actually have a vacancy rate of 5% actually mentioned on here. Very rare to see. Let's try to underwrite this deal real quick. By the way, this area, let's go back to the property real fast. I'll bring up the numbers in a second. This property, by the way, is probably a B market as well. Property looks like in great condition. Again, pretty similar to the last one, probably 7.5 cap all day long. I mean, on market value here, especially for this size of a deal.
Is that in there like close to New York, bedroom community in New York?
No, the last one was definitely much closer to Manhattan. Like much closer to the city, but this one is much further inland. Um, but still a good, still a good location. I mean, um, this type of deal here, I'm looking at this where they have only 126 in expenses. They have plow maintenance, water. Let's see. I don't see any repair budget whatsoever.
Or
They do have vacancy.
maintenance?
They don't have management.
Or I'm sorry, management. Yep, no
Yeah, they
management.
don't. No management expense here. Obviously, for 25 units, you're going to have management costs, whether you're doing it yourself or not. The 513 a year. They have a net income of 386. I'm looking at a net income of probably closer to 300, maybe 325. Um, and They want a 5.6 cap, again, 6.9 million. In this area, let's say here, price per door divided by 25 units, it's 276 a door, which is an absolute insanity of a number. Um, I would never in this market ever pay more than 200 a door. Maybe if it was all two bedrooms, right? I would pay, 205, 210 maybe. But because you can clearly see, the price per unit, which is nice. The rents you're getting, but um, let's see here if there's any other details. Oh, here you go. It's trying to say that they're trying to say that you can get every unit to over 2 grand, get your net income up to 5.8, and have a future pro forma. How much do you take into consideration, Dan, the potential cap rate that we see every single freaking broker on planet Earth trying to sell us?
I don't. Um, I think it does help guide me. So if I saw this information here and say, okay, well, then they're 2 grand with the apartment, I'd probably go verify that I could raise the rents. So
Yep.
maybe if you've got $300 per unit without doing any of the full renovations in low rent, maybe that justifies like a 6.5 cap on the 300,000, 310 of real NOI after you back out the management costs. I think the insurance cost is also light here. I think the
Mm.
insurance is a major issue in commercial real estate. And I think 22 grand for something that probably is going to cost $5 to $6 million to replace those buildings if they had a total loss. My guess is that that insurance probably is going to be closer to $35,000. Tough to tell.
Yeah.
You'll find out during due diligence.
1,400, I'd say 1,400-ish a door times 25, 35 grand. You're right on the money, buddy.
Yeah. Yeah, that feels
Um,
like a little more right.
yeah,
A
because
lot of
that's
times old owners will have old insurance, so they're underinsured. Maybe they bought this thing 20 years ago and they insured it for 2.5 million bucks, and they only have a replacement value now after modest increases by the insurance company taking action at 22,720 for the insurance. They're probably like a replacement value of 2.8, maybe 3.1 million. And if that whole thing burned down, it's going to cost $5 6 million to rebuild it, like all of it.
100%. Yeah, and it's actually kind of funny that you point that out. It's like, oh, it's like, because they secretly, like, it's like these are the things that they don't notice, but we would notice. We're like, hey, it's like, you're actually only really evaluating this deal at 3 million bucks, maybe 3.5 million. Right? So it's like, you want 6.9 million, but like you're not even paying. This is nowhere near the adequate insurance to have it actually valued at 6.9. And between you and I, like even though like this area is never going to trade at 300 a door unless it's absolute brand new construction, and it's so asking 276 for this type of product is absolute, it's crazy to me. It's nuts. Like I would
Yeah,
never pay that.
100%.
So 300 grand, to be honest with you, I'm probably offering somewhere close to, yeah, I mean, a 7.5 cap today is 4 million. Maybe you can stretch it to a 7 at 300,000 actual true net, right? So 4.285. But that's really it. I mean, this is. I believe that this will still be sitting on the market, until interest rates come down to 4%. So could be a couple years.
Yeah, my number on my calculator was 3,750,000.
I guess now I'm offering more than you this time.
And I probably would start there. And maybe you land at like 4 million, you sign the contract, and in due diligence on this deal specifically, I would ask for, the insurance would be part of the due diligence package, and I would see how much they actually had as the replacement cost on the insurance, and then that might be a retrade later in the deal if that was unacceptable. I mean, some of them literally are coming back 150% higher. You underwrite 25 grand and it comes back at 45,000. What are you going to do with the deal? Some
Yeah,
people
and
are just moving forward and buying them.
I know, which is actually an interesting point you bring up. Like keep in mind that like even if you miss out on a deal and they go with somebody else, the amount of people who are not only retrading but can't get financing right now, like it is, this is actually a very interesting time, a very high likelihood that the deal might come back to you. Like I just had a deal where the guy said he agreed to another guy's offer, literally same exact identical terms, but the other guy got to him first, I guess. He took that deal, and I'm like, no problem. I'll match his terms if he can't get financing, right? So and if it comes back to me, great. But like, I think there's a very high likelihood that it will.
Nice. Yeah, work to follow up. This is that season where the seller and their broker are often humbled by the realities of the market.
So, sorry, my
Cool.
internet keeps going in and out again.
So Henry, I know we're getting to the top of our time together. I do have two or three quick questions here as we close. First, we both mentioned What It Takes and How to Make $1 billion by Steve Schwartzman and Brad Jacobs, respectively. Are there one or two other books that you feel like might be impactful for the listeners to check out?
Um, those are actually some of my favorite books of all time. I think that some of you, if you haven't read any books. I've been a huge fan of Tony for a very long time. It's helped like more the mindset side of things. Like he just came out with Unshakable, and even a newer book now on private equity, which I think was very interesting, as well as some of his mindset books from before. And then the only real books that have really hit home for me, other than that, were really like Winning by Tim Grover. Great book. Relentless by Tim Grover. I think the guy who was Kobe Bryant's, Michael Jordan's coach, really helped me a lot.
Nice. Where can listeners go to find more information about you or maybe reach out?
Yeah, best place would probably be emailing me at the info at henryeisenstein.com, or just Google my name. I'm literally on every single platform you can possibly find me on. YouTube, I do a ton of content with over 1,000 videos, everything about commercial real estate, from underwriting to lead generation to everything in between. Or literally, you can just DM me on Instagram. Just say hi.
Nice. And my final question, Henry, what is the kindest thing anyone has ever done for you?
Wow. Kindest thing anyone's ever done for me. Probably the relentless love that my wife gives me. I just I knew she was someone different, and I've never had someone care so much. Like, even before we got married, just this woman has cared so much about me and my well-being. I've never experienced that before, and I knew that from that moment on. I was like, I got to marry this woman. I mean, this is it would be weird if I didn't.
Very cool. I could say the same thing about my wife of
100%, buddy.
4 months now. So, yeah. Cool. Well, Henry, hey, I appreciate your time. I got a page and a half of notes over here on the side. Yeah, I really appreciate you coming on the show.
Yeah, thanks so much for having me, man. Thank you.